Welcome back. It's been a rough week, guys. There's no sugarcoating it. There's no hiding from it. There's no denying it. Unless you were already short the market, hiding out in some really steady Eddie type plays, man. Rough week. We had talked about it last time. We talked about the tariffs that were coming on the 2nd. We thought a lot of things were going to potentially take place, and then the rug got pulled right out from underneath of us. We got blindsided by a Mack truck in the middle of the night, feeling, metaphorically, maybe it was, 5 o'clock or whatever time it was. But man, a lot of things changed. So I'm going to just really try to stay positive here. Look at this as an opportunity. Try to take everything in stride. I think that's about all we can do. We're going to try to pull on some history and try to make sense of what's happened before, what's happening now, and potentially what we can do to survive this madness. So yeah, that's my goal for today. Welcome, Let It Grow Investing. I'm Jeff. All those things we normally say, we're going to try to get it in right now. Let's take a quick peek at the Dow Jones Industrial Average. Oh boy, down 5.5% again on Friday. Thursday, not much better, guys. We were sitting 42.2, and we have dropped down to 38.3, 10%, 11%, give or take. Brutal. Oh, what can we take from this? Well, Trump tariffs. We got blindsided. We did not see that these so-called reciprocal tariffs were going to happen the way that he rolled them out. Now, call it the art of the deal, call it planned demolition of the market, like some people have kind of pointed to from a video from, I believe, True Social on like March 14th, 15th, that a lot of this was coming, right? We didn't really anticipate that this was what was going to be rolled out. We were thinking reciprocal tariffs. You do this, I do it back, we're even, right? The trade was even. That is not what we got. What we got was hey, you're taxing us at this rate. We're going to go ahead and tax you at 90% rate. I wrote some notes down here. I'm going to kind of go back over my note sheet here. So bear with me, right? I put down that fair trade makes sense. I like fair trade. That does make sense. Europe has been charging us a 10% tariff to import their automobiles from them to our market for however long, right? We have not been doing the same. So if we put 10% back to them, if they import our vehicles, that makes sense to me. That is fair. That's even. We're on a level playing field. What eventually happened, right after this was announced, after everyone could digest what was going on, was we took the trade deficit from each country, divided that number by the country's exports to the U.S., and then we cut that number in half to come up with the tariff rate. For example, with Lesotho, a small African nation, they got hit with the 50% tariff. Now, that is in part because we import $240 million from them, namely in apparel and diamonds, and they only import 2.8 million from us. So there is a trade deficit of $237 million, roughly, right? So now we put this heavy tariff on them because they aren't buying as much from us as we're buying from them. But they're a very small country that is very poor. So maybe we can get apparel from somewhere else, but we're going to struggle to get diamonds from somewhere else. So, and they're also not going to be able to close this trade gap, right? They are a small country that is very poor. So they are not going to be able to purchase $240 million from us. It's just not the way that it's going to work. We are a net buyer of consumer goods, and someone like this is going to get, steamrolled essentially. So it is not reciprocal. It's not even. If it's a 10% tariff from them that they're charging, then fair and even would be 10% back. Not, hey, we're going to steamroll you with 50% in tariffs and expect you to make up this trade deficit or else. Right? And so that's really tough. I know I don't like getting political. I'm going to try to keep it at the headline of, hey, this is what's going on, and this is what we can do to look forward. Right? And we were also looking for a change in behavior with tariffs. That had been talked about a lot of times. We want to be treated equal. right? We want people to, honor the fact that we're buying a lot of things from them and we don't want to get ripped off, right? We've heard, trade partners are ripping us off, for years from Trump. And, Vietnam came out and issued Vietnam and Israel came out and significantly reduced or removed their tariffs before Trump came out and said that he is going to raise these tariffs on them. So we didn't even change after they said that, right? Vietnam got hit with a 46% tariff. And that's why Nike, On Holdings, Lululemon just got obliterated. And then Israel got hit with a 17% tariff. So, like I said, it's not the same. It's not reciprocal. It is throwing all tariffs out there, trying to demolish the market. Some people have said the 5D chess move is for the fact that we're trying to refi at a lower rate, weaken the market, and then, eventually make the Fed cut their interest rates so we can kind of get back to growth, refinance at these low rates, and then kind of roll things forward. And now I'm looking at a Vietnam article here. I'm going to share this one as well. So this is from Reuters. Vietnam businesses asked Trump to delay 46% tariffs on Vietnam. U.S. and Vietnamese businesses have asked Trump administration to delay, saying the levy will hurt them in bilateral commercial relations. The Vietnam Chamber of Commerce and Industry at the American Chamber of Commerce in Hanoi expressed concern, saying the tariff to take effect Wednesday was shockingly high. And I agree. I wholeheartedly agree. I think it's, again, not reciprocal. It's not even. And if they're trying to play fair and essentially cut their tariff or remove it completely, why are we going to steamroll them, right? I don't understand the play. If it is simply just to lower rates or just obliterate the market so the Fed is forced to cut rates, I think there's better ways to do that, and I can't really support what I'm seeing. So, man, there's a lot of different things here. I'm not saying that the tech trade is done, but I am saying that it is, all bets are off as to where it goes from here. So, again, we're looking at NVIDIA. I'm going to share this tab. Sorry, guys. We're looking at NVIDIA, right? We're down to $94. This thing starts to make so much sense to me. I will add some NVIDIA here. Unfortunately, people that owe me for snow money haven't quite paid all their darn bills yet, so I don't have as much cash on the sidelines as I would love to have right now. And, the late fees that I'm charging them are not going to be enough to offset the discount I'm getting on these buys. Nonetheless, I want to take a look at some different stocks that I think start to make sense. If we look at last show, we were talking Cintas, United Rentals, UPS, Paychex, ADP. We were looking at some of these different names. We were looking at some utilities, and that is what I bought for the investing challenge. If you're new here, I spend $200 a week, put it into an account that is basically the Let It Grow investing account for now the fourth year. NVIDIA, I like it. I will add some. I will, when the money starts rolling in, I'm going to be adding some NVIDIA. I can't see that this thing does not make more sense here. The growth is still there. AI is not done. We have a very, very rough spot, and growth is going to be negatively affected. But NVIDIA, Meta, Amazon, I'm coming for them. I'm buying them. I will. It's no doubt to me. I have a long time horizon. I have the time on my side to be able to buy these and know that, we zoom out 5-10 years, these companies are going to be much larger than what they are right now. And this is a, not a head fake, but it is a downturn that we've seen before. If we look at this chart, we've seen it before. We've seen when we went from 36 down to 30. That's also 20% roughly, and we're doing that again right here. But right, so where do we want to look? Right, that is the $1 million, $1 trillion question. And if we go back, what has worked when we hit problems back in the 2000s? That's what we're going to look at right now. So You start looking at the drug stocks, the pharmacy stocks. I'm looking at Cardinal Health. I'm looking at McKesson. I'm looking at Bristol Myers, AbbVie, Eli Lilly in some regard, but Eli Lilly is going to be more revolutionary medicine. And I don't know that we necessarily want to camp in there if we hit recession, right? We don't really want all these new exploratory type things. We want to have those stocks that are just going to churn and keep on printing money, right? We're looking for stocks that are going to be domestic in nature. They have pricing power, no loss of demand, and no credit risk. That is going to be the playbook that we really want to live by right now. So, domestic in nature, these are going to fit the bill. Pricing power, those are going to fit the bill as well. Going down the line, I'm looking at United Health, right? United Health, 2.8%. When you look and see that NVIDIA was down triple that, United Health really starts to look a good bit better here. So if we look at the 1 month, how bad was the drop in United Health? It really wasn't, right? We're still, above where we were a week ago, right? So we're still surviving here. I think we're in a spot that is domestic, no real credit risk. No, they have great pricing power. No one is rushing to cancel their healthcare insurance. I know people are losing jobs. Hopefully we don't get into a recession. Hopefully that, the labor market stays strong. I know that risk for recession has pushed up to about 60%. So that is a point of contention that we have to really consider as well. Two more that I'm thinking in fintech. Not as domestic in nature, but they're still domestic. Visa, I'm still looking there. People are going to be swiping these cards to buy all those consumer staples that they have to have. But regardless if they have a job or not, they still got that plastic, and they're going to solve that, buying problems that they have in order to live, right? So Visa did get hit. These numbers are going to be very, very skewed after the amount of turmoil that we've had in the market this week. But Visa, MasterCard, those two I think are going to be, added to my position. Probably more so Visa because I already have a position and I'm not looking to start another one in MasterCard. Capital One, why don't I remember the ticker there? COF. This Capital One just got approved to purchase Discover Financial. This has been on the back burner for quite some time. We didn't know if it was going to happen. And now it's been approved that Capital One Financial can buy Discover Card or Discover Financial, DFS. So they got destroyed on, you're buying at a rough time. Maybe you're overpaying a bit now. All these kind of different shakeups that Capital One's going through right now. But I believe that this is going to be a huge growth driver for Capital One going forward. They have around 39% of upside right now. And this thing should have some good returns, good synergies from the fact of buying Discover Financial. So I like the play. I like the bank. Hopefully, if rates come down, we can start getting more building and going forward from here, right? So a lot of different things have to happen as far as recession. I don't really want to see that recession. I want to see building kind of return. I would like to see rates start coming down, but Discover Card and Capital One should be a strong company going forward. Telecom. Next group, I will be buying more Verizon. AT&T's been running pretty well lately as well. Verizon starts to make more sense to me. The pricing wars between the two kind of seem to be over. Everyone's in a plan. They're definitely in that growth or return on capital type cycle. The 5G thing's been built out. They spent all the money on that, and now we're just kind of churning along, printing money. So I do think that Verizon, more people cutting the cord to cable, that does affect it, but more people are going to be using more bandwidth from cell towers. So telecom, I still think is a strong business. The faster it gets for 5G or whatever goes on next, I'm guessing 6G would be, better service, better, speed on your mobile devices around the country. So Verizon could be in a good spot to buy these now. The ones that I'm talking about are buying now for stability, right? I think they have some upside. You're getting a better yield on all of these stocks as they come down. I think we can go ahead and start purchasing some of these names for stability if you are looking to buy right now. If you have a little bit more risk, maybe a little bit more time on your side, that's when you might want to kind of look at some of these tech stocks as they really get hammered and just slaughtered down to a level where we ultimately can purchase them. Going forward, I'm looking TJX, right? A lot of retailers are looking to buy excessive amounts of inventory before the tariffs go up. They're not going to sell all of it. We've seen this play happen during COVID. We couldn't get our hands on everything, and then we just ordered everything. And then remember, Target had inventory problems. Nike had too much inventory. Everyone had too much. That could potentially repeat itself, right? I think that these companies that are ordering all this are hoping that we have a strong consumer. If that consumer slows, these goods are going to be dumped at a discount to TJX, and they're going to buy them at a discount, and then people will buy those from them in time, right? So I think TJX could be a good play on, a diversified retail, cyclical, but, some of it is staples. Kids are going to need clothes and people are going to need winter coats. It's just going to be what it is. I understand there's more cyclicality to it, but I do believe that they could prosper from this over purchasing of all this inventory. Moving forward, man, I don't even want to mention this one. I'm going to go with Lockheed. The other one that's I got written down is Boeing, but you guys know my thoughts on Boeing. Lockheed, somehow they're still going to get in their own darn way. Lockheed, right? I definitely think that some other governments are going to start purchasing heavier in order to offset the trade deficit, and they're going to try to negotiate for better tariffs as they are spending more on planes. And I think that could be done with Lockheed or with Boeing, some other manufacturers as well, or defense product, right? So not just planes, but defense products that they're going to need for their military forces and whatever. So I think that we might start getting some negotiating, that people are looking to buy more product, get it into their hands to reduce their tariff burden, to reduce that deficit that they are currently in as to how much we're buying versus how much they're buying from us. The more that they buy, the less that they're going to have to pay in tariffs, which hopefully helps them out, hopefully helps us out. We will see going forward what that ultimately means. Consumer staples. Man, this one kind of becomes like almost a no-brainer, right? Some people are going to go with the store brand, but you're going to have a lot of people leaning into something like a Procter & Gamble or a Coca-Cola for the fact that it is non-cyclical. People need these products to live their everyday lives. They're domestic. They have pricing power. They don't really have credit risk because they have cash. I think that they're going to be just steady eddies going forward. So Coca-Cola, Kimberly-Clark, Procter & Gamble, potentially Johnson & Johnson, those are all the type of stocks that should do well during this type of uncertainty. Utilities. Again, NextEra. I do like NextEra here. Duke or Dominion could be a good play. American Electrical Power could be a good play. So there's definitely some stocks in the utilities that, people, once again, these stocks fit the bill of the overall domestic with pricing power, no credit risk, and, they're going to be steadier stocks. Yes, they got obliterated on Friday as well, down 7%. So hopefully we can start to see these things start leveling off. I would like to add some more NextEra. I do believe that is a stock that could be purchased here. I believe that it's going to enter oversold territory before, some of these other high-flying tech names that, they're probably already in oversold, but I still believe that they have more downside to go. So NextEra, we talked about that. REITs. I like REITs. Realty Income is going to be one of those. However, they do have a little bit more retail risk. So Realty, ticker O, you're going to get paid out monthly. They are a monthly payer. That dividend should be sitting around 6%. I'm going to call it maybe 5.5, 5.65. That one starts to make sense. What is that? Is it VTR? Yeah, VTR. You would think VTS. That makes more sense. Ventus, they start to make a lot of sense, right? They own senior housing. So you don't have retail risk. You don't have so much with, tariffs. There's not really anything with tariffs there. So they should be a little bit more insulated, a lot US held. At least I believe that most of them are US held. And in the UK, I believe most of which are going to be in the US. So yeah, another idea for something that could, kind of thrive through this uncertainty that we've got out here. You could look at insurance plays. You could look at Chubb Insurance, which is going to be ticker CB. Again, people aren't all just going to cut all their insurance in mass because of the fact that tariffs are going up. So Chubb Limited could be a beneficiary of these tariffs, again, domestic in nature, and could survive what's going on out here. Another one, waste management. Waste management's going to be a little bit more tied to building. As you know, if people aren't building, they're not getting more clients. That's essentially how it's going to go. So if we see a slowdown there, we might have a slowdown in waste management, but I think it's still going to be a steady company going forward. Now, if you are looking at tech, man, a lot of these names have got just beat down. We're looking at CrowdStrike coming back down to earth. They got massive upside when you're looking at old information here. Microsoft, 41% upside on Microsoft. Meta, let's take a look there. We've got 50% of upside on Meta. Like I said, I will be buying that. Amazon, still really going to lean heavily into these companies. 56% of upside on Amazon. I know these numbers are old, but I know that this fall from, pushing 240-ish down to, where are we at now? Down to 180, 170. Overdone, completely overdone in my mind. I don't think that Amazon's going to fall off of a cliff. If you think that TJX or Costco is going to do well, I have to think that you got to believe that Amazon's going to do well going forward also. So they're still going to be heavy in AI. They're still heavy in a lot of other industries that TJX or Costco isn't going to touch. But I think that gives us a better entry point to get back onto buying Amazon. Now, is it going to go down? Potentially, right? I showed you this article that the US and Vietnam are already looking to talk. Now, that could be a driver going forward. When Vietnam and the US reach a deal, and this brings people to the table, and we get out of this 46%, and then we say, hey, let's land on 10%. I think that a lot of these companies, On Holdings, Nike, Lululemon, start to explode higher, right? So Nike probably went up on Friday because of that Vietnam news that they were looking to talk, right? That was definitely something that was kind of known a bit earlier in the week. So 50% of upside there, man. I think that, Nike could be bought here. If Vietnam's already ready to talk, I think that Nike would be a safer play. I think that your downside is very limited if they're already coming to the table, and Nike's already had this play before. We've had too much inventory. They know what to think about for that. We don't necessarily want to overproduce and over order, so we're going to kind of get that in line, get the Vietnam government in line, and kind of go from there. So On Holdings, is it ON? We could see there again, not going to be domestic in nature, but they are going to be tied to Vietnam and US. So we're going to see them move up as well on some of this Vietnam news, that those two countries are already, at the table trying to figure this thing out before we just go into this all-out trade war. So we could get some reciprocalness in nature on tariffs there. So a lot of things to decipher here, guys. This has been a super hectic week. I didn't really take a look too much at the market on Thursday and or Friday. Both days were busy for me. We really got to look at what we want our portfolios to do. Do we want to set us up for protection right now? Are we waiting for the bottom in tech? Do we expect this thing to really start rolling back higher as tariff talks kind of come together? A lot of different things. Yeah, you can go out and buy realty and waste management, but does that limit your upside when this thing starts to roll back higher? Or do we think that we're going to enter a recession and we're still going to get obliterated another 10, 15, 20%. And that's when we start buying. So for me, I will be doing a mix. I'm going to be doing growth. I'm going to be doing value. I probably won't be buying any insurance. I will buy some more utilities. I will probably add some more Next Era. I'll probably add some more because I like the stock. I like that monthly payer. I will likely add more Eli Lilly. Now, I just said that if you were looking for less risk to go to Bristol, Abbott, or AbbVie, but I think that Eli Lilly for me is a great pickup. United Healthcare, I'll still be buying that. Visa, told you that one. Verizon, I'll probably buy that. Costco would probably be my pick there. We already know the Boeing and Lockheed discussion for me. That's an easy one, and it doesn't start with a B. That's going to be LMT. So LMT, Costco, VZ, I'm just circling all my picks here because I'm building a playbook. And when this cash hits my account from snow money that people owe me, that is now creeping up on 60 days, all bets are off. Gloves are coming off. We are buying, and that is just what's going to happen. So I am sharpening that pencil. I know where I'm going. I don't think I'm buying any Coke or any Procter. I don't think those two are for me, but I think they could make sense depending on your age and what you are looking to do, right? So if I'm looking at a Procter Gamble, why are we looking at Procter Gamble? Well, they're going to be steady, right? We're sitting 163. You probably got not even a 3% dividend. So that one is lower than I thought. This one, I was getting about a 3.25% dividend a while back when I actually owned this one. So 2.33% dividend yield on PG doesn't really excite me. It doesn't really give me the growth I want. It doesn't give me the dividend I want. So something like, that might get me similar returns on growth is going to get me a lot more in the way of a dividend. So I would much rather be there for myself. Next Era, more in the way of a dividend, probably more in the way of growth than a Procter Gamble. So I would rather be there. Waste Management, I do like. I just never really got into that one. Capital One, COF, that does start to really make sense. I'll have to take a peek at that one a little bit closer. NVIDIA, Amazon, Microsoft, Meta, man, I'm still looking. Tesla's a battleground of all battlegrounds right now. This thing is tough to call, guys. This is so tough to call. If we're looking at this chart, I mean, if we look over a year, I mean, we're kind of back to where we were. You take out this whole mountain, it's like we got to the other side of the mountain. Elon is reportedly stepping away from Doge. He's going to step back from politics, which I think is a good thing for Tesla. I don't know if all damage has already been done. I don't know how much I want to put into this right now. It seems like a battleground stock that I don't know that I want to be in. I have a couple shares. I have some of the investing challenge. We've added this one before. It might be like $1,000. It's nothing. That is so insane. So that one I might buy into that one at some price point. I'm not too sure what that price point is right now. If it starts with a 1, I will probably be forced to buy this thing. I don't know. Gold, man. We saw gold really rally. Ticker GOLD for Barrick Gold has come down. I think that we could probably buy some Barrick Gold. They are also in copper. And this one potentially has a decent amount of upside, I would imagine. 35% there. It could be a good spot to park some money if you're in that type of mindset right now. Park your money here and kind of ride out the storm. The other one that I think did really well, and let me go ahead and pull up where I am on Bitcoin. Bitcoin actually went up. Well, this ETF went up on Friday. Let me just get a current read on where Bitcoin is. We're at $83,099. If I look at the 1 week chart on Bitcoin, we're right where we started the week. I'm just pulling up my crypto.com app. So over the past 6 months, I'm up 32%. 3 months, I'm down 19. So we definitely steadied out or gave back a lot of those gains. Not really steady, sorry. 1 month, I'm down 7%, but on the week, I'm down 0.96. So they did not have the volatility in Bitcoin that we've seen throughout the rest of the market. I told you guys that April should be a strong month for Bitcoin. So we had a couple little technical issues there. But yeah, Bitcoin, right? Bitcoin has been doing really well over the past week, right? While everything else is getting obliterated, they're only down about 1%. I definitely think that Bitcoin going through April could start to rally back higher as people almost use it as a store of value. If the dollars are going to get weaker, people might roll that into Bitcoin. If we don't want to be in gold, we could roll that into Bitcoin. I think that more people around the world could use that as a little bit of protection rather than watching their economy get destroyed, or watching their currency get destroyed. So maybe we start to see some value being added back to Bitcoin. So that is my thoughts for the week, man. It's been brutal. Hopefully you guys are surviving it. Hopefully we have a game plan going forward. I know that my plan is once this capital starts rolling into my account, I'm going to start averaging back into the positions that I have already laid out. Man, if I'm looking at the list of my post-it note here of what stocks I want to be buying for the investing challenge, oh man, this is I'll run through the list real quick. NVIDIA, Tesla, Meta, Amazon, Eli Lilly, NextEra, CrowdStrike, Costco, Bank of America, AMD, or IB. I think the thing that is going to catch my eye right now is going to be IBIT. And that's not to say that I don't like NextEra here, that I don't like Costco. I think that Bitcoin has potentially got one of the most stable bases right now, and everything else seems to be on the chopping block. So as I just said, currency destruction around the world, I think could happen. So I think people might start funding into Bitcoin to protect their assets. So I like other names here. I definitely like the utilities. I think that, some of these tech names I just rattled off could go lower, even including Eli Lilly. That's more revolutionary tech, more revolutionary pharma. With like the side of tech kind of rolled into it. Costco really does make a lot of sense. I haven't even looked at that one as to see where they are this week, but I think that they could do well. I'm just going to take a look at Costco real quick. Costco sitting at 916. NextEra, we are at 67. I did pull that one up already. So yeah, IBIT, that is going to be where I'm putting my $200 for, I don't even know what week we're on because I'm not doing the poll this year. So let me know if you like this idea of just kind of rolling through this list, seeing what starts to make the most amount of sense for this given week, point in time, everything else. Let me know if this is working. If it's not and you'd rather see like, hey, what, pick three, and these are the three that I would even consider. Maybe we could do it that way or something going forward. But yeah, for now, IBIT, Bitcoin, that's what I'm buying. That is what I'm going to roll some cash into. Yeah, I guess I can buy that in the Webull account. If you need help getting started, I do have links for Webull, Crypto.com, for E-Trade, for Binance. I'm not really doing much on Binance anymore, but my links are all there to help get you started. There are some new offers on Webull. I think you have to put in like $500 to get 20 free fractional shares, so you could get that and get a hand up on getting started in the market. So thank you guys for stopping by. Please make sure to like, subscribe, and share, and I will catch you in the next one. Take care.